What's going on, everybody? I'm one of our seasoned traders here at TradeUI, and throughout this video we're going to go over a couple of basic technical analysis setups and how you can utilize these setups to give yourself a trading edge. So I want you to sit back, take some notes, and let's break down support and resistance lines and combine those with trend lines. So we have a couple of videos about support and resistance lines, and we also have some about trend lines already existing in the YouTube channel. But I want to combine these together and show you how you can really use this as a trader. So support and resistance lines are ranges where the price tends to pivot. So what I mean by that is you can see right here the price of snow bounced off this 132 level, ran up to 154, came back to 132, but couldn't quite go any lower. It kept reversing and going this way, then it came back again at that 130th level, and vice versa here. Did it here, 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 and through this area right here. So what does that tell us? That tells us that it's really hard for snow to break down below 130. Now it also works for the other side. You see this 190 level up here. It popped right here, pulled back down, pop, pulled back down, pop, pulled back down. So basically, it tells you where the price of the stock has a tough time breaking through a level. We can utilize this as target points and entry points for trading stocks. What I have here is snow pulled up on the year-to-date chart, and what you need to notice is you can originally top out where you can easily see these price levels. So here 190 touched here, here, and here. However, let's use a tactical advantage here and really understand what's going on. We have a lot of testing around this 180 level as well, and if the price is below 180, we need to understand that it's going to test 180 before it tests 190. So a more conservative trader should be targeting this 180 level versus this 190 level, because we hit here, here, we almost tested it here and again here. Looks like we tested it right here, right here, right here. And it looks like the last time we had a test was the 180. We could probably see a test the 170 before pulling back down. However, let's set up our resistance lines to see where we could pull back down to. So it kind of works the same way. You set up your major support zone, which is definitely this area right here. As you can see, we tested several times through here and here, and it looks like we tested again right here. But let's also see what happened. Let's throw all this together. I believe if you pivot over right here, we had earnings, and we actually beat earnings on both sides. So that gives us justification to potentially bump up this support zone from here. And let's put it right here. Now, why are we drawing it right here? Because we tested around this level. Looks like we came back, broke through, consolidated in this point right here. You see where we hit here and here and here, right here. And then we tested this 150 level again, broke up, came back down, tried to break through, couldn't do it. We held it here. Looks like we're starting to hold it here again. It's never going to be accurate to the cent. That is impossible to find unless you have insider knowledge or you know exactly what the whales are doing with the stock price. But what we can do is we can narrow that channel down as tight as possible to figure out where we can potentially capitalize on big moves. We don't have to make 20% return on the stock. We can make 10 to 15% and be just as fine. There's only a $10 difference right here. On a $165 stock, that's not really that much. Right here to the downside, the same thing. You have a larger window right here, roughly like 12, 13 bucks. However, we have to remember, guys, that we don't have to be accurate to the cent. We just need to be as close to right as we can. And this is how you can be as close to right. Have conservative levels. The reason we drew this one out is because we tested right here, right here, right here, and right here. And this is exactly how I break it down every time. The first thing we do is we actually set up our major support, our major resistance line, and our major support line. And then we'll narrow it down where we see a little more consolidation and testing. This is called adding multiple layers to the technical analysis. All right? But here's something else I want to show you. So if I go a little bit larger out, let me go to the long-term chart. really hard to see here, especially with all these lines in the way. So what I'm going to do is actually delete this line right here because it's just going to get in the way for what I want to show you. Now I want to show you a trend line that we have going on and show you how all of this comes together. So remember, trends have to touch down 3 times, so technically you could see it right here. However, what we have forming here is, let's see, my mouse. Let me pivot this around a little bit. Alright, so roughly right here, we're in a trend. Now you might say, oh, well, it broke down here, so I should be drawing it right here. That's not necessarily the case. This zone, this 150 zone, shows us that is a good buy zone for most people because we don't have to target the trend line exactly. It gives us a rough range of entries or exits. So remember, we hit here, came back. So we verified that this is an uptrend. Now you could have probably drawn it up here and see where it was going up to the 170. However, you also got to factor in different things such as earning calls, overall market, etc. But what we can do is draw where it lines up now. We see strong buying in the 150 zone because we tied up with a strong support line, a strong long-term trend line, right out of beat earnings. This is an easy play from 150 to 180. The reason we target 180 right here, we're a little conservative because we tested here, and here, and we pulled back down. And in the previous, looks like we also tested here and one more time here. So you can target that 190 if you want to. However, for this one, this is a good entry at 150 and a good target to 180. And the reason we have this trend line here is because we have this low here, saw an uptrend, and it happens to line up right with a current support line. That's when you put it all together and actually find a good entry on a good solid stock. Now, let's look at a different one. Now I have ARCB here. So ARCB, kind of the same thing going on here, but we're going to focus on the trend line itself. So the trend line that I see going on here is roughly in this range here. Alright, if I can draw it out. Now let me tool around with it a little bit. There we go. Oh, there we go. Alright, so here's what we got going on here. Alright. So right now we are on a trend from here, consolidated right here, bounced up to the upside, and it looks like we actually have a small trend right here that I broke through. But right off the bat, we see a solid trend where we could come back to this 95, 94 level. Let's see here. If I go to my drawing tools and draw some price levels, I want to show you a few things. First, I want to show you this area right here. We tested the 110 level. Looks like we rejected to the downside. And it looks like our current support zone is right around where we're at now, this $100 level. Let me show you exactly why I'm drawing it right here. If I can get it to draw for me. There we go. All right. So now, the reason I drew it here is because we had resistance here. But if you look back here, you might be asking, well, why didn't I draw it right here? Because that's where the resistance is at. No, not necessarily. If you can see, we broke up and came right back down, and we broke through. So you can line this up with the current market data, and you can kind of pinpoint where support and resistance is in the past. What I mean by that? Well, technically, I would be saying, why is it draw it at 103? Why is it at 100 or 99? Because it's undecisive, but this range is definitely a support zone range or a resistance range. So now you know that this area between 95 to 100 is a good buy zone to the 110 side. If you want to be more accurate, you can wait to see if it tests this trend line and bounces on the upside, but don't be shocked that it won't bounce right off of this current support line here and go to 110. All right, we got to look at everything that's going on. Look at the earnings. Let's see, looks like they didn't beat earnings actually on this one because they had the 2.5, so that could be negative news there. But like I said, that's just the EPS, so there's a lot that you could look at on this. But if you go back to it, support and resistance right here, you have support right here around this $100 level. Already see some action coming in. Cross-reference the option flow volume to see what's going on. And to do that, you can click on that link below, take you to TradeUI site. That way you can read option flow, combine it with your technical analysis, and learn how to give yourself a trading edge. Guys, it takes multiple things to become a good trader. It takes good technical analysis, good fundamental understanding, good option flow data, and lastly, it takes tools to give yourself an edge, and that's where TradeUI comes into play. Click that link below, it'll take you to TradeUI site. Go ahead and get started. Check out the other videos we have on the channel that show how you use all the tools. And guys, at the end of the day, I just want to make you a better trader. So I hope this video helps you out, and we're going to end it here.